Hello, hello. This is Jennifer Klein Lewis, and I'm with Coldwell Banker, and I am happy to interview and introduce to you Carl Lewis, owner, operator, and extraordinary lender of LRG Lending, the man, the myth, the legend. Hi, Carl. How you doing?
Hi, Jen. I'm doing great. How are you? Thank you so much.
Fantastic.
I'm honored that you thought of me and that we're able to do this together on Zoom. So
Well, you had a lot of interesting things to say, so I thought I should record it so other people can hear it too.
great. Yeah, I'd love to share.
So, I mean, everybody wants to know, how is this COVID-19 stuff affecting the lending market? Talk to me about that.
So it's had a huge impact on lending. We actually had some volatility in January, which was kind of unrelated to COVID-19. But then when COVID-19 came along, we had the most volatility ever in mortgage in March. And so we saw rates drop, and then rates have come back up a little bit. And so really a big part of the COVID-19 issues that have come up with lending have been related to the forbearance, if you've heard about the forbearances, and then also have been related to, which is kind of the same thing, but related to job losses. So we've had a little bit more in terms of conditions at the end, making sure that people still have a job, and that they're gainfully employed, because that's an important part of the lending process. So those are the main things that we've seen, and we've also seen some tightening in guidelines for qualifying as well.
Didn't it, we had spoke before, and there was, they had taken some loans away from the market, jumbo loans and some of them funky statement loans, which may not be a bad gig, but is that across the board or certain banks, or what does that look like?
Yeah, there still are some jumbo lending options that are out there, but they have by and large just gone away,
Mhm.
which is unfortunate. I feel like this is temporary though. We'll probably see those come back. We
Okay.
also have the other loans that you were referring to, like bank statement loans. We call those non-QM loans, and those loans, yeah, for the most part have kind of gone away for the time being as well. But
Mhm.
I do feel like both jumbo and non-QM will come back. I feel like this is a temporary thing. We might see some of this tightening, continue, and
Uh-huh.
not necessarily getting worse. I feel like it's going to get better, but we might see that some of these guidelines don't go away. But I think just lending programs in general, like the bank statement loans and jumbo, will come back. So.
Okay. And are you seeing any this? Are you seeing appraisals being affected at all? Like, what's your stance or experience with that?
Yeah, we have seen appraisals. We've seen that, well, obviously it's a little bit more difficult for an appraiser to go do an appraisal. So I feel like they're maybe a little more anxious. They're, out, in the public, and they're wearing masks. And so I think that whole situation has made things a little bit more challenging for appraisers, but also appraisers, we have had a few appraisals that have come in a little lower. For the most part, we haven't. We feel like the market's been pretty stable, but we have had a few that have come in lower, and I think it's just because there's just less demand in the market, so there's a few less buyers, and so
Okay.
um, I don't know. You would know more about that. So I feel like we had a little more than normal in terms of appraisals coming in under the sale price, but not by a lot. So.
I actually just spoke with a client today who's getting an appraisal waiver. Are you seeing more of that with purchases, or is that becoming more of a thing? Or
Yeah, actually, we're seeing that a lot. So when someone's putting down at least 20%,
Mhm.
we're seeing that most of the time, if it's a good credit and they've got some assets, that we're able to not have to get an appraisal. It's mainly based on the property value.
Okay.
Just the system knows, our automated underwriting knows, it pulls automated values, kind of on the back end. And so, yeah, a lot of times we're able to get those. I would say probably for us, it's about 50-50 in that
Yeah,
situation, maybe even more.
that's a lot.
Saves $500 too for the buyer, which is pretty cool. So
Yeah.
we do see
Well,
that.
it's certainly giving my buyers some peace, as well as the the sellers of the house, because that's always something you're kind of walking on eggshells. You never know what's going to happen with it. But
Yeah.
getting that waiver is a reason to celebrate. So one thing that we had talked about too was, if you're in a forbearance, or if you're considering a forbearance and refinancing. I just want to touch a little bit more in depth on that. Like, you can't do one with the other kind of thing, is what you were saying.
Yeah. So the forbearance, the big thing that I would point out with the forbearance is that it's a good thing that borrowers are able to have this program available to them because most loan servicers make it pretty easy to get a forbearance. However, if you don't need it, then I highly recommend that you don't do it, just because we don't really know the long-term implications in terms of credit, what that's going to look like. And actually on our side, so I'm a mortgage broker, so I get a lot of communication from all different lenders.
Mm-hmm.
What we're finding across the board is that most lenders are making sure that they communicate to us and tell us that if a borrower says that they're planning on doing a forbearance or they've already requested a forbearance from the lender, that we're actually not allowed to do a loan for them. So if that's any indication of the future, if something does appear on your credit report, there's definitely a chance, I would say right now, a high likelihood that you're not going to be able to get a regular mortgage, after you've done the forbearance, at least shortly after. Or in the very least, there's definitely a chance that that could happen. So if you're needing the forbearance, it's there, it's great. If you don't need it, then we recommend that you, that you don't do it.
Don't do it, yeah. And I guess one of the things kind of that I'm applying that to is somebody has a lot of equity in their home and they think, oh, I'll just do the forbearance to get by. And then they realize that they need more of a chunk of money, that they're not going to be able to necessarily access that money if they've already done the forbearance. So it's very important that if you think you might need the money, you tap into your equity before you tap into the forbearance. I guess that's kind of the lesson I'm seeing here. So what are we thinking long-term here for all of this? I mean, we had some things lifted today, so that's great, but what do you think?
My opinion, I feel like with the way the market is right now, we've had I would say it's an excess of margin in pricing, which means that based on the kind of underlying indicators of where interest rates should be, they actually should be a little bit lower.
Mm-hmm.
And so as we've seen a little bit less, tend to see that with volatility, that rates will be kind of puffed up. So as we see more stability, we'll probably see rates come down more. I believe rates will come down more. I think we'll see even lower rates in the future, perhaps later this year. And I also feel like there's a lot of pent up demand in the real estate market. And in all kinds of other industries, I'm sure too, because of COVID-19. I think we're going to see a tremendous surge of demand that we're going to see when everything goes back to normal. And maybe things will never go completely back to normal, but at least as people's lives normalize, I feel like we're likely to see rates tick down a little bit. And no predictions. I'm not sure. I don't have a crystal ball, but I do.
Disclaimer.
I do feel like there's a good chance that will happen. Perhaps a higher likelihood that they'll go down than go up.
Mm-hmm.
So we might see a little bit lower rates and might see more demand. So I feel like it's, we have a lot of good things coming as the shelter in place goes away.
Yeah, I agree with you. I'm seeing that there's a lot of people out still looking to buy. I just put a listing on and we had 7 showings in the first day. So yeah, there's definitely people out there moving and shaking and trying to find their next shelter in place home. Hopefully we never have to do this again, but that if it does come up, I think people have that in their back of their mind. If we have to get stuck at home again, I want to be in a good one.
Yeah, totally.
Anyway, Carl, if you want to give your information, if anybody wants to talk shop with you.
Yeah, of course. So again, my name's Carl Lewis. I'm with LRG Lending. That stands for Loyalty, Respect, and Gratitude. And our website is www.lrglending.com. And if you do have any questions regarding lending, feel free to call or text me on my cell phone, which is area code 916-532-8620.
And Carl actually does answer his phone and he's great at texting, so it's not just a facade. Anyway, you can also contact me, Jen Klein Lewis. I'm 916-678-1552, 916-678-1552. And we'll be doing more videos at jenklein.com in regards to what's coming. I actually have another foreclosure video coming out as well. Not a lot happening in the foreclosure world, but keep in mind that it will be out in the next day or two. Look forward to hearing from you all and stay safe and healthy.
Thanks, Jen.
Mm-hmm.